For those ideas, let's touch base with Mayuresh Joshi, Fund Manager, Angek Broking, joining us with his sense of the markets. Mayuresh, there's so much to talk about this morning, but I want to particularly start off with autos because they'll dominate the screen for the better part of today's session. Connect that with, how you have an impending rate decision coming in from the RBI later in the day. So that'll just keep the rate sensitives under the radar. Give us your sense on Tata Motors. Would you be a contrarian in the market and buy the stock at lower levels? Because when things turn, they could turn pretty quickly.
Morning, Tanveer. I think looking at the numbers and the performance of JLR, and though one will account in terms of the destocking effect that has taken place, along with the reduction of import duties specifically for the Chinese operations, I think the kind of negative operating cash flows that they reported along with increased working capital requirements both for the standalone operations and JLR, I think that has dented their EBIT margins on the JLR front, though the domestic operations probably have held up pretty strongly. Now in a scenario like this, I think it becomes very difficult to comprehend when the recovery will probably happen. And the assumptions is that the normal destocking effect should reverse over the next few months in terms of both reported numbers as well as expectations in terms of the pickup that you're probably seeing with the new launches, so whether that be E-Pace or the Velar SUV. So on that front, again, I think valuations, if the stock correct, will look attractive, but the stock might go into a prolonged consolidation phase. So again, within the four-wheeler packs, I think Maruti probably has been our preferred picks over the last few quarters, and it will remain so in anticipation of volume still remaining strong. The input cost inflation that you probably witnessed for all auto companies in general, that should probably start abating in terms of price hikes that the companies will take. And again, the leadership position that it has along with the fixed cost absorption of its Gujarat plant should propel earnings. Now with expectations from the auto universe as a whole, I think the four-wheelers should have a reasonable show this time around. Within the two-wheeler pack, again, I think there should be a very strong showing. What probably happens in terms of the discretionary demand, specifically on the rural side, are important trends to watch out for. With the axle load norms coming through, you might have some amount of disruptions over the next couple of months in terms of MHCV particularly, though LCV sales might just hold up, offsetting kind of trend we'll probably see in terms of volume degrowth. So again, I think reasonable set of numbers should get reported by auto companies, but I'll remain specific whether it's Maruti within the four-wheeler pack or a Hero MotoCorp within the two-wheeler space.
Let's go back to Reliance once again, and the Economic Times today is reporting that Reliance has won that arbitration case, and Economic Times is reporting that story. ET Now.
PSU banking pack. While BOB was a great performer, both in terms of earnings and then the price action as well, can't say the same about Bank of India. Clearly the asset quality continues to remain under stress. We saw the stock as well feel the heat, and it clearly seems that you've got to be selected within PSBs once you're picking those stocks. What within PSU banking pack do you find of interest, and what would you say is a conviction buy right now? Mayuresh?
Yeah, Aisha, morning. So in that respect, again, I think some of the numbers were very, very encouraging. So what Canara Bank probably reported in terms of the absolute numbers was a very encouraging sign. Again, the numbers reported by Bank of Baroda, and again, the kind of granularity that we're probably seeing specifically in terms of retail advances picking up, and the kind of stability that one really expects both on the GNPA front, the net NPA front, slippage is coming down, the provisioning actually being far more stable. I think being selective here, so State Bank, Bank of Baroda within the top tier names, Vijaya Bank in my opinion had a good show within the mid-cap names. With the overall stressed book at 7.8%, you're probably looking at tier 1 ratios also remaining strong, leading to strong earnings momentum and return ratios improving over the next few years.
Pre-open rates, Bank of Baroda down 3 rupees. Now these are pre-open rates, and frankly it doesn't matter what happens in the initial first 2 or 3 minutes.
And Mayuresh, do want to know your thoughts. Are you recommending to clients with regards to how to differentiate in opportunities within the banking space? I know you've spoken about banks at large, but is there an opportunity that you're staring at within the regional banks? We spoke about this at length yesterday as well, the likes of a Bandhan Bank, RBL Bank. Do you think they are in the works of becoming the biggies?
So again, in terms of trends, Tanveer, banks like a Bandhan and RBL will show tremendous growth because of the low base that they're probably working on. Again, banks like RBL is something that I'll remain extremely optimistic about over the next few quarters. They're building up a very healthy CASA franchise. And what you're probably talking about in terms of the stability, in terms of asset quality, that's probably getting displayed. Though I think a few portions in terms of their agri loans is where the stress still remains. But I think that has been taken care of in terms of sufficient provisioning. What you've also seen in terms of the advances growth, I think the kind of capital advocacy that RBL possesses at this point of time, I'll not be surprised that they'll keep on posting a very strong momentum on the top line in terms of advances growth reflecting in NIIs, and that will clearly reflect in terms of how their NIMs will spread out. So NIM should be far more stable going ahead. Credit cost should start coming and dwindling down. And again, a large portion in terms of their ROEs, ROAs. The exit rate itself is around 13.5 that the management has indicated in terms of ROEs for FY19. So even if they're able to achieve that, I think there is still potential upside in terms of what that bank can achieve. So yes, I think within the private mid-cap banks, I think RBL Bank probably remains our top pick.
Particularly that you'd be looking at for?
So for Imami in particular, Aisha, I think the volume growth should be pretty strong, specifically on the low base that you're working at. The other element in terms of the input cost inflation that we probably witnessed for a lot of FMCG companies, they've been successfully able to pass that through with small hikes undertaken. The third element obviously is the wholesale dependence that has come down significantly. So as on last quarter it was 38% with the kind of retail reach at almost 0.85 million compared to 0.73. So the premiumization in terms of the products that they've got, the leadership that it probably has across categories, I think that should itself be sufficient enough to drive volume-led growth as discretionary demand starts coming back. I was hearing Nikunj out in the morning, and what a lot of management has alluded to in terms of their commentary, specifically in relation to the volumes and the realization aspect. I think that should probably have some amount of bearing in terms of strong earnings momentum, and competition intensity probably will also start dwindling down, and that should also support return ratios. Valuations may be on the higher side, but Imami probably still is not in those mid-40s compared to the others. So Imami should stand out, and even Exide's commentary would be very, very interesting with lead prices coming off, what you're expected to see in terms of both OEM and replacement demand holding up, along with the industrial segment actually picking up steam over the next few quarters. That can have a say in terms of their EBITDA margins and a reflection on their ROEs. So I think these two results will be very, very interesting to watch out.
Let's to go 3 stocks which should be on everyone's radar. Number 1 really has to be Dabur. I will pretty much extend what